What will be the long-term effects of COVID on the overall economy? That's the question everyone is asking, and that is why I want to welcome you to our Tuesday Finance Update show. Every single Tuesday, we'll update you on what's going on in the economy and how to position yourself as a winner, whether the market goes up or goes down. Welcome to Momentum Property Education. My name is Daniel Wood. I'm one of the founders of Momentum Property Education. Make sure you subscribe to our channel so that you every single Tuesday get that update in what's going on with the economy and how do you position yourself to win no matter what. On Thursdays, we interview top experts from all over the world. We've had Kim Kiyosaki on the show, Jordan Harbinger, Simon Zucci, Shimon Rudish, Meb Faber, all kinds of amazing people. And on Saturdays, we do passive income mastery, where we update you on how do you create passive income here in 2021. So make sure you subscribe and please like the video so that you show the YouTube algorithm that this is the type of videos you want to see more of. Now, let's get into the numbers. What's going on with the economy? What is the effects COVID is having right now and long term? So we see in the UK that lockdown has been extended. We're not completely opening up, so that is causing a delay. Now, the good news is that retail is holding strong. The retail sales is holding strong. It has gone down a little bit, but it is stabilizing. So that is good news. It shows that the economy is waking up again. The bad news is that inflation seems to be here to stay. We will continue to follow it, but it's already over 2%. By the end of May this year, it's over 2%, 2.1% in total. So that we'll see what the long-term effects will have. And we'll get back to it in the end of this video. I'm going to talk about what will an inflationary market mean to the overall economy and to us as property investors. What do we do? But look at our video that we did last week, our last week's, where we looked at the impact of an inflation or even a deflationary market. So there are a lot of factors playing around. So make sure you check out last week's video. Now, let's look at what is going on in the numbers in the economy right now. So the good news as well, unemployment is coming down. It's down to 4.7% now in the UK. So employment is rising. More people are getting jobs. Salaries are slowly but surely being pushed up a little bit. So there is some pressure there, which is good for the overall consumer, but will probably continue then to push up inflation. So we'll see where it goes. Now, house prices. So for us as property investors, what's going on with the house prices? Well, house prices are inching up still. They are going up. We're led by the Northeast. It's up 17% year over year. London's a little slower at a 3.3% growth. So we're having a lot of growth in the north parts of England. There is some upward pressure, but it seems to be calming. In April, only 120,000 property transactions went through, meaning the tempo has slowed. Now, I know that's not just because of the amount of purchases. Solicitors are not working at full capacity, but hopefully that will start to flow again. Now, all this means a lot of things for the economy, right? We're seeing inflation go up. We're seeing employment go up, unemployment go down. We see that retail is stabilizing. There is more growth. Online sales is up 50% year over year. So a lot of things are going on in the economy. What this will mean for us long term is that we need to be ready as investors. We talked about inflation and deflation last week, so please, again, go check out that video because it talked about how if we have an inflation, that means you want to be buying properties now and taking advantage of that growth because property is a very inflation-protected asset. The rents go up, and so does the value of the property. In deflation, actually, that can be good for property in that the rents can go up during a deflationary period. But if we have strong deflation, that can have some serious impact on us as property investors. So make sure you're safe, even if rents go down, even if values go down. But long term, we're probably going to see some scarring, but not as much as was originally expected. The Monetary Fund, the International Monetary Fund, has bet that they have done an analysis and they think the scarring on the UK, the long-term scarring, will only be a 1% effect on the UK economy. Now, a lot of experts do think that is very, very optimistic and that they're probably putting that out to actually help boost the economy, but they might be right. They do a lot of analysis. So make sure that you are positioned in a way that whether the market goes up or goes down, you are safe. Now, when it comes to interest rates, what are we going to do? What are we saying? Well, in the UK, they're not touching the interest rates. In the US, they just voted not to touch them, but they are starting to plan for it. So they expect to raise either in 2022 or 2023 to raise the interest rates. About 7 of the committee members in the Federal Reserve are expecting to raise it in 2022 and 13 in 2023. So it's growing quickly, the sentiment to raising interest, and that's as a result of inflation. So make sure you're positioned, right? If the market goes up, you want to have a property portfolio, acquire as much property as you can. If the market goes down, make sure you can survive that. Make sure your properties are positioned in a way you're not over leveraged. You have cash flow so that you can survive a downturn, because once you get through that downturn, that's when it will go up again. So sooner or later, we're going to have growth. The question is, is it going to continue now as we've been seeing over the last 12, 18 months, or is it going to slow down for a period and then come roaring back? So that's what we got right now. Thank you so much for joining us. Make sure you stay tuned for our interview on Thursday. It's a good one, so make sure you subscribe. And on Saturday, we got Passive Income Mastery, which I know you're going to love. So I'll see you there. Thank you so much for joining us here again. Make sure you like the post here, the video, and please comment below. I'd love to hear your thoughts.